I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly video with our friends at Strategas. This week, we are lucky enough to be joined by Chairman and Chief Investment Strategist Jason Trennert. Jason, how are you doing today?
I'm doing great, Ross. Thanks for having me.
Yeah, it's a pleasure. I want to do something a little different this week because you wrote a piece that kind of perfectly fits this kind of video, where you run through a handful of worries that the market is thinking about, and there does seem to be a little anxiety under the surface, and basically just say whether you're worried about them or not. So if that sounds good to you, yeah, we'll get into it.
Terrific. Yeah, sounds like a good plan.
Awesome. Well, let's start with the number one worry for the past 6 to 12 months outside of the pandemic itself, and that is inflation. We had another pretty hot inflation print this week. So where do you all stand on inflation? Are you worried about inflation at this point in time?
Ross, I am. I think it seems clear to me that the chances of inflation being, in the Fed's words, transitory are pretty unlikely, and that the Fed itself has, I would say, moved the goalposts on what transitory means, which is to say that at the start of the year, they kind of suggested that transitory might mean a couple of months in the spring. And now here we are in August, and we're clearly still dealing with inflation. It seems likely that we're going to continue to deal with it. One of the vexing things, the difficult things, is that it is not leading to higher long-term interest rates. So one of the primary reasons why you worry about inflation, at least initially when you're in our business, is the impact it would have on earnings multiples and bond prices. And that's not having a particularly big impact. There are other things going on. I think for just people, though, just if you're not as an investor, for us as people, higher inflation is likely going to be with us for quite some time. And that's mainly because the sources of it, which are massive fiscal and monetary stimulus, are going to be with us a long time.
Yeah, I think that makes sense. And let's use that as a jumping off point to talk about the fiscal side of things. We have seen a tremendous amount of fiscal stimulus over the last 18 months, but 2022 could represent a bit of a fiscal cliff in the form of tax increases that might be included in the massive new stimulus bill out of Congress. Are you worried about tax increases on the personal side, on the corporate side? Where do you all stand?
Yeah, well, of course, on the personal side, living in New York, I'm no stranger to high taxes, and I'm not thrilled about that. But I also think on a more on a broader level, I am concerned that you're going to get meaningfully higher taxes on corporate profits, and particularly on corporate profits from companies that rely on intangible assets. So healthcare or technology companies, there are going to be pretty big increases in taxes on corporate profits there. And those are very big sectors and drive a big part of the S&P 500. And it seems very likely that that's going to go through. It seems very likely that the Democrats are going to pass a bill through reconciliation that would have big investments on the one hand in the social infrastructure, but it would also carry with it big tax increases as well to pay for it.
Well, and you mentioned that the tech sector might be seeing some outsized pain on that front, and that is one of the it's obviously the biggest sector in the S&P 500. Let's talk about a different tech sector, the tech sector in China. So you wrote in the piece about kind of the recent crackdown that the Chinese government has put on a few industries. We've had US-China tensions in some way, shape, or form for a long time. Are you worried about this specific instance or this kind of manifestation of that?
Ross, I am a little bit more worried about it, and that's mainly because it seems to me with the pandemic, it appears to me that China is becoming more belligerent, more bellicose. I think China's brand has been damaged, and it seems to me that China's really making no pretense that it has a very different system and is going to continue to not be as Western, perhaps, as everyone else would like. That's important because China, I think, again, was a major source of disinflation, major source of global growth. And to the extent to which China becomes somewhat more inward-looking and has a crackdown on certain capitalist parts of their system, it's hard to see that as being a good development, both for inflation and global growth.
Well, Jason, I want to thank you so much for the time. It's been a pleasure, and we'll look forward to chatting with you again soon, I hope.
I look forward to it. Thanks, Ross.